Welcome back to Fast Market here on the Schwab Network. It's time for our cash tag segment. For that, let's bring in Landon Swan. He's a co-founder at Likefolio. Welcome back to the show, Landon.
Thank you, Tom. It's good to be here.
All right. So Target down 25% this year. Is your data reflective of this? I mean, this thing's turned. I remember like a year and a half ago, Landon, it seemed like everybody was pretty happy. I mean, your happiness levels were good for Target. Is your data reflective of the stock moves and the weakness that we've seen in this name? Because it seems like they've made a bunch of mistakes.
They have. You know, I mean, you can kind of tell a story here. Going back to Q1, they were one of the first to report in this, I guess, shrinkage, which is just retail theft. They said they added about $500 million in additional loss on a year-over-year basis. So obviously that they're kind of started that trend, and they haven't done a great job of curbing it. I mean, they don't really enforce shoplifting policy, so they just become a bigger target. No pun intended there. And then in Q2, you know, they kind of got involved in politics a little bit with Pride Month, and that was during the whole Bud Light thing. And you know, the people who were boycotting Bud Light threw Target in with them, and that caused sales to decline about 5.4%. While still, theft was still an issue for them. So they've had a rough year so far, you know, and the stock's down, you know, I think 30% over the last 2 quarters alone. So really struggling a little bit. I will say that, you know, the data that we've got was reflective of that. I mean, everything was pretty negative for them. For the first time in a long time, Walmart had higher happiness than Target, which I don't think we've ever seen. But I will say that now the happiness seems to have normalized. I think it's getting further and further in the rearview mirror, some of that stuff, and now we've got the happiness levels back up to where, you know, we're kind of used to seeing them. Target 68%, Walmart 61%. That's what we've been used to, and so we're, you know, the past 30 days comparison here is actually showing that people are a little bit happier with Target, and you know, the way that the normal thing with Target being higher than Walmart. When it comes to some of the other data, though, it's not as great. So we look at, for example, web data. Target is the back of the pack, and they've actually, you know, we look at that on a year-over-year basis, and they were lower, and now they're extending that being far behind the crowd. So Costco's at, I think, plus 9%, Walmart's -3%, Target's at -10% on a web visits basis. On mentions, they're down even more than that, about 40% on a year-over-year basis. And again, you got to remember what these stats kind of indicate. It's basically like how many people are going into the store, right? Feet in the door, clicks on the website. That's what we're looking at. We don't know how many dollars per trip each person is spending, but we do know that Target is the worst of its group when it comes to year-over-year change in number of people going into the store, going onto the website. And I think it's evidenced by the expectations from analysts. I mean, they're looking at a 4.8% decrease in sales, whereas Walmart is expecting a 4.4% increase in sales. So you've got a little bit of a divergence between these two companies, and they're fairly similar. They're not identical. They're fairly similar. I think Target does lean a little bit more towards the discretionary side of things with clothing and home goods, toys, electronics, things like that. And Walmart might be a little bit more on the staples side, but still they're very, very close, and you shouldn't have two companies that far apart in expectations, down 5%, up 4% year over year. That shouldn't happen. So Target is definitely doing something wrong. Again, we see it starting to turn slightly with the happiness, but we still have pretty low expectations for this earnings report. I think the market has very low expectations, so I don't see them selling off huge, but I would be very surprised if they had a big snapback rally off of this earnings report.
Yeah, Landon, the bar is incredibly low for Target, and like Tom said, they made mistakes on the discretionary inventories, and they didn't focus on the grocery, the staples like Walmart and Costco did. But that being said, they do have inventories down at pretty good levels. They've basically stopped promoting, so the margins are going up. Even in a tricky environment, they're still promoting higher margins, so that's good. The hope, Landon, and I'd like you to comment on this. If the cyclical nature of our economy starts to turn up, and they've got their inventories and their cost cutting down to good levels, and we start to switch back towards some discretionary, then is Target a buy? Is Target a favorable name? Or have they lost so much of their cachet because of what you just said about politics and about all the missteps that they've made. Did they do too much damage for them to recover?
You know what? I think the U.S. consumer is pretty fickle, and I think they have a short memory. I think that Target can turn this around with a great holiday season. I'm optimistic that they do. I mean, we've always seen those stories, Black Friday, all the chaos that can happen, and usually those wild videos come out of Walmart, not Target. So I think if they can control themselves and have a very strong holiday season, give customers a nice normal experience that they experienced back in 2022 and 21 and 20, all the years past, then I think they can put this in the rearview mirror. I know that they've added Ulta. They're getting Kinder Scott jewelry in there. They've got their new kitchenware line. I think it's called Figmont, something like that. So they're adding a lot of higher end type stuff, and I think that they're focusing on building back that reputation. So they've hurt themselves. I think that they got out of politics. Thankfully, they need to now make sure they crack down on all the shoplifting. That's got to be they have to take care of that. But if they can come in with a solid, Black Friday, Christmas shopping season, then maybe in Q4, and Q1, we can start to see some good numbers out of them. For this particular report, I don't see it coming, but there could be some optimism based around just the stuff that you've mentioned, Kevin. So I wouldn't put it past the market to kind of buy at this a little bit. I don't think it's going to be a big pop up to the upside, though. I just don't see it happening with all the data that we've got coming in so low.
Yeah, closing stores probably going to help them a little bit too. They're closing them in New York, San Francisco.
I wouldn't go to Walmart on a Black Friday. If you gave me a Secret Service detail to go with me, I wouldn't go.
I don't know if that would help. But Landon, going into this report, I mean, it sounds like you're pretty dour on this. Do you have an earnings score going into this Target report?
Yeah, so our earnings score is -21, not extremely bullish. Some of that takes into account that the stock has sold off so much and expectations are so low. I mean, that goes into the score as well. So, if this was a stop the bleeding kind of moment and our data looked pretty strong, I could see a positive score coming out of our system, but it's not there yet. It's starting to turn. Happiness has finally gone over Walmart's level of happiness, but the mentions data, the web data is still negative, so it's going to come out as a negative score even with that 30% drop in the last 2 quarters. So we're at -21, cautiously bearish, and expecting maybe a turnaround next quarter, but not this one.
Yep, and I think one of the caveats we haven't even talked about is the conference call. I mean, the CEO's got to be a little bit more positive. He's got to be, have change in his mind of what they're doing. How to change that happiness, how to reset inventory, how to, close underperforming stores. We need some guidance from him.
These CEOs have to take lessons on how to give a conference call.
Yeah.
Look at Tesla. Elon Musk's conference call, that wasn't good.
Yeah.
The last time, I mean, these conference calls are so vital to how this stock settles or where it settles. And obviously, you got to have something to say, right? You can't. But yeah, you're right. Conference calls are a big part of earnings.
Yep. All right. Great stuff as always, Landon. Appreciate the data.
Thank you, guys.
All right. That's Landon Swan, co-founder at Likefolio, breaking down the data. One of the other